All right, gang. So prices at take profit 5. Shout out to take profit 5 today. Um February 9th. You see a push above take profit 4 to take profit 5 on a 4-hour candlestick. As you know, I scroll in more, you can see yellow candlestick push past take profit 4. It was consolidating at take profit 4 February the 8th and February 9th. It was consolidating at take profit 4. You can see a box around here. We don't really see structure. We see little candlesticks. When we see little candlesticks on a higher time frame, just let us know. And we see a bunch of them, a bunch of little candlesticks on a higher time frame. Just lets us know that price is consolidating. And then we finally see a push above take profit 4 around 10 o'clock. February 9th. But February 8th to February 9th, it took 1, 2, 3, 4, 5, 6 4-hour candlesticks, a whole day to get all the way up from February 8th to February 9th. It took a whole day. It took 6 4-hour candlesticks to get all to break this consolidation. And then you see this 4-hour candlestick around 10 o'clock push all the way up from take profit 4 from 1827 all the way up to 1834, 1835. And then we've seen a push back down. Once we've seen a push above take profit 4 at our 1830 level or our psychological level or take profit 4 level, price was going to take profit 5. As I could show you more structure. Here you go. Once we seen price pass take profit 4, okay, we knew price was going to take profit 5. Once price gets past take profit 2, price is what? And consolidate at take profit 2 after a major uptrend and consolidate, and then once price goes past take profit 2, next level what? Take profit 3. Once price passed take profit 3, it went past what? Take profit 4 before heading back down, and then we seen another push past take profit 4 all the way to take profit 5. So extremely important to understand as we're about to break this move down. So this is all for your psychology. Extremely important. You can go back to the 15 minute. Let's go back to the 15. Scroll back. We can start here. Let's start this here, right here, and just break this move down. All right, gang. So when you're trading, you have to remain motivated and persistent. As you can lose in this market as well. You can lose in this market as well. I'll show you some examples of where we just lost that. Where we just lost that right here, back in February the 2nd. Once price got to take profit 2, get out the trade as price will consolidate, show us some type of candlestick pattern, break this trend line, and then if you didn't get out this trade at trade 2 and trade 1, price headed all the way back down, past great trade 2 and great trade 1, and got you out this trade. So you have to remain motivated and persistent even after you lose a trade, as you could have got back in the next day and rolled this all the way back to take profit 1. Like, losses do happen, and this is about entries because you entered at the wrong area, and this is why you lost this trade. It's also not getting out at take profit 2, trying to swing trade this trade, and this trade didn't happen until February 4th. This trade didn't happen until February 4th, and it rolled it all the way up. You could have rolled it all the way up to take profit 5, February 9th. It didn't happen the first week. This took 2 weeks to happen. As we go back, I can show you. This took 2 weeks to happen from February 1st to February the 9th. It took 2 weeks for this to happen. This is February 2nd and 3rd, and you're trying to swing trade this, and it stops you out. So it's important to pay attention to what price is showing you, and not to enter a trade too early, or too late. As you enter a trade too late, you enter at the middle of an uptrend. This is for like entries, as we're now breaking down entries. So as a trader, it's easily to become impulsive. It's easily to become impulsive, as I'm just going to show you this example. As we're in a true uptrend now. So it's kind of really hard to show you example. I can show you example right here of what price did in the past. February 2nd, price shot past all our trades and got everybody out this trade. And as traders, traders are easily impulsive. it's a thing. It's actual a real thing. Just like boredom is a real thing when you're just looking at chart patterns all day, and you're over trading. Because you want the thrill of trading, and you want to make 10K and 15K a day. 20K a day, which is possible. With practice and experience, you can make that. But as just looking at candlestick patterns all day, it can be boring. That's a real thing. You start over trading, you start gambling and risking too much of your money, and price shoots past all your trades and gets you out these trades. Depending on your lot size, you could have lost 20K, 50K, 2,000, 3,000, 5,000, a couple hundred, and blew your account. It happens. So as traders, this is more for your psychology and for entries. As we're going over entries now, as traders, same thing here too. As traders, you want to get in that great trade one and great trade two. This is where you make the most money at the bottom, and you ride it all the way up. All the way up to take profit two from take profit three. As traders, this actual thing as being impulsive. Just like it kind of goes hand in hand with being bored. Like looking at candlestick patterns all day, you're being impulsive, and traders easily become impulsive. And you have to control your impulsiveness in this market. You have to be able to control that impulsiveness just to get into this market, and start, as you can get in for an entry at the middle of an uptrend. And, if your psychology isn't right and you don't get out and take profit two at a psychological level, 1805, 1804, or, after price goes to 1810, starts to consolidate, starts making what? Lower lows and lower highs and lower lows, brace this trend line, and you still don't get out this trade. You're trying to swing trade this. A lot of things can happen. You could lose your money. Chances are you will lose a lot of money, because you're just being impulsive, and you got in that trade one and trade two, impulsively. It's just steady and just waiting for price to head back down, and then you could have gotten that great trade one and great trade two and rolled this all the way up to take profit one. But you got in impulsively a trade one, a trade two, and you didn't really like analyze the market. That's like the first thing you have to do is analyze the market before you even gain an entry, as this is all about entries now. And we were kind of talking about entries before, as these are entries, great trade one and great trade two. This is the best entries that you can get in at. But we're going to really, really dive into entries now. As this is a real reason why a lot of people lose in this market. It's because they get in at the wrong entry, and you lose a lot of money like that. So you got in that trade one and trade two at the top of an entry at the wrong entry. It's an okay entry, as you could have easily rolled it from 1800 all the way up to 1810, depending on your lot size. Still could have been 10K, 20K, but you're trying to swing trade this, and you're up in the lot size, and price swings past all your trades. Same thing here. You could have gotten an entry at here, thinking price is heading back up at 1803. You could have gotten it for an entry right here. Boom, put an entry right here. Right at trade two, but you could have gotten over here after price was heading back down, and you thought price was heading back up. Cause you see price heading back up. You could have got in for a trade three. Could have got in for a trade three right here. You could have got in for a trade three right here. Obviously, trade one and trade two, and you could have got at 1810. Then once price breaks, breaks this trend line, starts making lower lows, gives us an even star pattern, that price is reversing. You're still trying to get in impulsively. Like traders, it's called impulsive traders. Like it's a real thing. Like where you're getting a trade impulsively just because and you see yellow candlesticks forming, and it's pushing back up to take profit two, and you're thinking it's going to break past take profit two, and this move didn't happen until the next day. This is February the 3rd. February the 3rd, this move didn't happen, and we didn't see a break above take profit two until the next day, and went to take profit one, from February 3rd to February 4th. But you got in that trade three right here, and you try to ride it all the way up, and what price shoots all the way down. you know, and we're gonna break this down again. All right, gang.